Well, good morning, everyone. You'll have to excuse me. I'm trying to fight off a cold here, so I might be sounding a little bit hoarse. And I'm trying to be quick with my mute button so I don't end up coughing in your ear. But forgive me if I do. My name is Eric Senft. Thank you for joining us today in our open house trading room. What you're looking at here, for those of you who are new, this is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Scalper. The top right is the Falcon Swing Trader. The bottom left is the Eagle Trend Trader. And the bottom right is the Raptor. Now, the Raptor is the latest addition to the DTS family. It's actually kind of a hybrid. It incorporates elements of the Scalper, Swing Trader, and Trend Trader all into one tool. The market's just open. What we're looking at here on this screen is the NASDAQ. I'm also following the British pound and crude oil, but I can take a look at any market which is of interest to you. So maybe we'll start here with the Eagle. Let's take a look at where the market has been in the overnight. Ooh, another big overnight session. The NQ has just been so wild the last week, almost insanely wild. All right, so we've got the London Open right around here, and you can see a little bit of thrashing about. Actually, we had a trend change signal occur way up here, so the market must have been moving fairly fast for the signal to occur that late. Yes, as a matter of fact, it only took about 10 minutes for all these bars to print here. So the market was definitely on a tear. A little bit more chopping around. A couple of red bar buy signals here in a row. Those tend to be high probability signals. And more thrashing about. So it looks like today, or at least in the overnight, is going to be a lot like the market has been the last few days. Very, very difficult to trade. Another trend change signal, this one developed a little bit earlier. Oh, before I get too far ahead of myself, I want to point out that all the signals develop the same way, regardless of the tool. So when a signal is developing, here, let's go to where we are right now, we're going to get a warning dot as well as an audio alert. Once all the signal parameters have been met, we're going to get a triangle and a hash mark. That tells us that all the requirements for a particular signal are there, and that enables us to take a trade. So had I set this up to take this buy, you can see we would have just managed to reach our high probability profit target right now. All right, so the good news is the market still has lots of volatility to it. The bad news is the market still has lots of volatility to it. So we'll let them thrash about here for a little bit. It is only a few minutes after the open. See if they can't shake this out of their system. So that was the Eagle Trend Trader that we were looking at. This particular tool here, this is the Falcon Swing Trader. Now, this is not just a reprogramming of the other tool. These tools have been specifically designed to try to pick up on particular market environments. We're actually working on a trend change signal here to the downside now. Let's see. Oh yeah, there they go. They're just moving so fast again. There was our trend change signal, and we're just flirting with our profit target. Oh, just hit the profit target. And then look at that reversal again. This is what we were seeing yesterday too. Except the problem yesterday is the market would come a few ticks short of our profit objective before reversing. Well, we'll leave the Falcon alone here for a moment. Oh, while I'm on the Falcon, I want to point out this series of lines right here. This is our ultimate support and resistance suite. You may have received an email about this a little while ago. This is one of our most popular indicators. And you can see, look at how well the market has just been sandwiched between these two resistance levels right here. So it's almost as though we could just bracket that range and let the market fill us on either side of that range. That's a pretty big range, though. All right, we're going to put that on the shelf for the moment. Here is the Hawk Micro Scalper. This is a great little tool. If you like scalping the market, once again, the signals always develop the same way. We get the warning dot, we get the triangle hash mark when the signal is complete. You can see right now we've just got the warning dot. Now the signal is complete. This is what we call a macro pullback signal. And let's see whether or not that has enough to get to our profit target. This is now called the green bar sell. Come on, get down there. Get down there. There you go. So we just hit our profit objective there also. So lots of opportunities this morning, but you got to be really quick on the stick to try to get some of these signals going. Oh, way to go, Mark. Mark says he bagged a signal on the Hawk, got that NQ red bar buy for a onesie at $200 profit. Well done. Oh, I think that was a red bar buy here on the Eagle. Back here. Just right out of the open. Well done, Mark. Jim likes to shoot me the advanced decline numbers here, and he says we got almost 2,100 buyers and only 270 sellers. Or sorry, the other way around. Oh no, sorry, I had it right the first time. 2,100 buyers, 270 sellers. He says, if that even matters, because yesterday's advanced decline numbers were so lopsided also. The market really did not respect it very much. The Raptor is, I mentioned the blending of the other instruments. So it incorporates elements of the Hawk, the Falcon, and the Eagle. And here too, we're looking for confluence and signals. So we're looking for warning dots, triangles, hash marks, everything more or less to be in sync. This particular tool you see right here, this is called the Geiger counter. This is essentially a tape reader. So you can see the time and sales. You can see the needles getting a little bit green here, suggesting that there's a little bit more buying pressure at the moment. We'll see whether the market absorbs all that. All right, let's see if we can't find a half decent signal. The tool that I'm using in the margin here on the Raptor is called the Trailblazer. It's a one-click trade entry and management system. All right, let's see if we get a failure now off of this hard edge and if we come out with a buy signal. In fact, the place to buy, I can enter my buy stop above there already. Like the Trade Manager, which is the other tool I'm going to show you in a moment, we've got 16 different stop strategies here. So currently the trade is enabled, and you can see the Trade Manager automatically rolling my stops. Come on, get up there. There, so we just hit our break-even trigger. Come on, don't fail now. Get up there. Oh, you stinkers. They did that to us yesterday too. Kept hitting the break-even trigger and then trying to reverse again. So, oh well. Break-even is better than a loss. So now we're working on warning dots and a possible sell signal. Let's see if they're going to try to go to the short side now, seeing how they did not want to go to the high side. Slipped us a couple of ticks here. Come on, that's close enough to break even. Good, we hit the break even trigger. Oh, don't fail. Okay. Well, we got profit on one, and then they did a full reversal and tapped us out of break even on the other. So just another insane day here in the NQ. It's not normally like this. If you've been following the NASDAQ for any time at all, you know that it has enough volatility that you can make some very nice trades, but it's not usually like this. This last week has been exceptional, historic actually. I don't ever remember the stock indices being like this. Okay, we're getting a sell signal here on the Eagle. This is what we call a green bar sell. I'm too late to take advantage of this, but if I was not highlighting the tools, we might have had a chance to short that one also. So very nice signal there. Let me show you the build-up here, why this was a nice signal. The tools all use the mean Renko bars, which is a chart style that's been developed for Indicator Warehouse or by Indicator Warehouse. And here I said I was going to get you some information about these things. So you can pick up all these tools. They're all standalones. And Tony, I see your question. I'll get to your question right away. You can follow that link. It will have pricing for these tools and so on and so forth. The mean Renko bars are also something that you can add to your current trading platform. But the reason this was a strong signal is we had what we call a test of the extreme. And this is pretty easily identifiable on these mean Renko bars. So we've got a market which is obviously in a downtrend. We get a little bit of a swing high here, so the market might be changing direction. And then we get this failure. This is called a test of the extreme price being right here. And then the market fails, and it produces a sell signal. Now this green bar sell, excuse me, sorry, just had to clear my throat. This green bar sell, which is coming off of this hard edge, is a very strong sell signal for us. Now, it's currently against the ATR. That's this red and blue squiggly line. So what I've been doing is I've been letting the market turn the ATR line over, in which case this now becomes my signal bar. And I would probably set up my trade to look something like that. And you can see that we had some very good follow through on that. You're also going to notice how often the market hits our high probability profit target and then makes a reversal. And this has been true, especially true the last few days. It's almost like there's no point in trying to have a runner on. Even though there's sometimes some explosive moves, it seems that just go all in, all out, just grab your profit, be happy to get it. I'm not liking the hawk here where we're getting all these yellow bars. These yellow bars are a very neutral sign, and especially when they all seem to be printing on the same latitude. This is what traders refer to as barbed wire, and you can see why. There's no real follow through one way or the other. This, by the way, is a first micro-macro cross signal down here. which tends to be a fairly reliable signal. But because of the barbed wire, I would probably set up my trade like this. See, and now we're into yellow bars again, which nixes the trade. So a lot of people, when they're looking at this, they get confused. They think that we take all these trades, but really we don't. What we're doing is we're going to hold out for the most promising trades. There's certain trades which are higher probability than others, and we have them highlighted. This is what we call a cheat sheet. I'll just show you really quick and then get back to the markets. This cheat sheet highlights the high probability trades. So you have things, this is the hawk, by the way, but we have like the first micro macro cross, the macro pullback, the 4-arrow consolidation, the post 4-arrow consolidation, and then the red bar buy or green bar sell. These are our 5 highest probability signals. You'll notice there's other signals that print on this chart and other signals that have decent follow through, but these are the ones we focus on. Oh, and see, while I was saying that, we had a first micro macro cross to the upside, which I would have attempted because the first micro macro cross to the downside didn't go anywhere. So that looks like that had a promising little move to it. All right, let's throw that back on the shelf. With all this volatility, you can be sure we're probably going to get another signal or two. Yeah, okay, Tony's got a question here about the Geiger counter. He says, Eric, when we see these little islands or these little plateaus that develop in the tape, he says, does that indicate that the HFT traders, that stands for high frequency traders, if you didn't know, are pouring orders into the market? I don't really know whether it's the HFT traders. You can watch the count here to see. Sometimes you'll get some real bursts in the numbers. But whether it's the HFT traders or not, it's important to see how the market responds. Now you see we just had a big spike here in the buying. And we'll see here in a moment whether the sellers are absorbing that. Okay, so far so good. The buyers seem to have it. Now, if this plateaued all of a sudden, and by plateau I mean it's going to look like this on the tape. It goes up, it goes like this, it comes down, and then goes like that. Then that tells me that the buyers just got trapped because the sellers absorbed all that buying. Let's see, a mini plateau there, not quite the plateau I was looking for. Yeah, but those plateaus will show you that the buyers are, or the sellers, if the plateau is reversed and goes the other way. If the plateau looks like that, then it means that the sellers are all getting trapped. Okay, so we've had a little test of the extreme here. We're back into the cloud, and we're getting some support. We'll see whether we come out of here with a sell signal. We're getting a warning dot. I'm going to anticipate a sell signal printing. We're going to leave it right there just for the moment. If it fails here again, then the sellers definitely have control. No, there go the buyers. Okay, buyers are going to give it a push. We actually have the market pinched a little bit here. I don't want to get too close. I would prefer a sell. At this stage, I would prefer a sell. But we do know that these hard edge bounces off of the trading band here, they can have some decent follow through to them. So that's more or less what our trend line is looking like. But I'm not basing this so much on the trend line as I am on the price action itself. You see, they failed to move higher. All right, I better engage a stop here. Oh, they've already hit my profit target. Oh, sorry, I was a little bit too late with my stop. They already found my profit objective. Hooray! Better that way than having them reverse against you and having to reach for the panic button. Okay, well, they're almost acting normally again. This is a nice pace that they have going on. Well done, Mark. Mark says, I hit those 2 green bar sells on the Eagle for 2 more $200 wins. Well done, Mark. Knocking $600 out of the park. Way to go. He says, I'm done. I hit my goal and I'm locking in my profits. Sim from here on out. That's a good plan, my friend. Arlen is asking, good morning, Eric. What calculation is setting the high probability initial profit target? Is it done in the indicator package? The high probability targets were developed when the tools were developed, and it's done from an extensive period of testing. These tools were all tested for a period of 9 months, so just as long as it takes for a baby to be born, that's how long these tools took to be born. The high probability targets for the scalper are $50 per contract. The swing trader and the Raptor, $100 per contract. And then the Eagle Trend Trader, $200 per contract. Now, if you think you can't make money trading for just $50 a contract, which most people don't, you're obviously not familiar with the math behind trading, because if you trade just twice a day, just 2 trades a day for $50, oh, here we're getting one of these little plateaus that Tony was asking about. We got a plateau to the downside. We got a mini plateau to the upside. You see how they're kind of isolated here? Or an island. I like Tony's phrase, island. We'll see. So it looks like right now that selling plateau left a bunch of sellers stranded. So an early warning. The nice thing about the Geiger counter was actually developed because a member was asking, how can I gauge whether or not I should stay in a trade longer? So if you were short from this soft edge sell and you get down here and you see the Geiger counter starting to plateau, you might think about getting your stops in a little bit tighter in anticipation of a reversal. But it's also helpful for entering a trade. But I digress. I was telling you the math behind winning trades, even if you take just 2 trades a day for $50. Just 2 trades. You don't chase a bunch of signals. You just try to find 2 trades that you can make $50 on. If you manage to do that every day with a single contract even, you will make $20,000 a year. And from there, it's just math. Do it with 2 contracts, not more trades, but instead of one contract, use 2 contracts, you'll make 40,000. If you do that with 3 contracts, you'll make 60,000. 5 contracts, you'll make 100,000. That's just on 2 $50 trades or one $100 trade. So that certainly makes, once you come to terms with that, that certainly makes your trading life a lot easier, because now all of a sudden you're not chasing signals around. You can actually wait. Yeah, what do they like to say? The hunters, keep your powder dry, right? You want to be ready. You don't want to be chasing stuff. You want to be ready when the opportunity presents itself. And I think, Arlen, I think you emailed me a question also, which I was going to talk about today. Let me see if I can find your email. I got it right here. Oh, yes. Okay. Arlen was asking, this is a great question. I'm going to try to address it here this morning for you. Arlen's watched some of the videos that are online regarding the Trade Manager. That's this tool that you see here in the right margin. And I'm just going to let the market ride out till the top of the hour so we kind of have that opening range settled. And then we'll look for another opportunity. But right now, this is a good opportunity to answer Arlen's question. And a lot of times in these videos, I'll say that you should start with a larger stop, because a larger stop will increase your probability of success. Never mind risk-reward ratios. That's a whole other animal that doesn't really work. We're talking now probabilities. But he says, at what point do you decide the trade is not going to work out and you get out of your trade? Do you always just let it play out to hit your initial stops if it goes wrong? Is it a gut call to get out? So let's take a look at that, which is a great question. Okay. So what we do is, here, let's take a look at this signal right here. This is a trend change signal on the Falcon. It also happens to be a late filter entry signal, both of which are high probability signals. What most people do, because they try to achieve some sort of mythical risk-reward ratio of, say, 3-to-1 reward to risk, is they will set up a trade that looks something like this. They'll put their stop really, really tight, and then they'll go hunting for their profit target. And they'll say, okay, I got to get at least 2 times or 3 times my risk, right? So if I'm risking $50, I need to make at least 150. So, all right, something like this, anyways. And they look at the chart and they say, yeah, okay, there's support down here. This is a good trade. And then they go and they take the trade. But what happens is, if the market even has a little bit of a hiccup, it will stop them out. Okay, now sometimes it's hard for me to show this on DTS, because DTS is very good at picking up market momentum. In this case, the market didn't even hesitate and it started heading down. But a lot of times, if you're not using DTS, you may get a signal, the market hesitates a little bit, it stops you out, and then what happens? You got it, the market goes down and hits your profit target without you. Okay, so how do you avoid that? Well, you avoid that by running a deeper stop. You go with a stop that is technically sound, not mathematically sound. Right? The market doesn't care if you're a small trader trading with a $10,000 account and you're trying to limit your risk to only, less than $100. The market doesn't care. What the market does is it goes to technical points, right? We know that this is where the sellers stepped in to the market, right? Because this is where the sellers started pressing the market lower. So that would be an ideal spot to cover our stop. And you can still choose profit targets as like you want, but a lot of traders will look at this and they'll say, oh, I can't take that trade. I don't have at least a 2-to-1 reward to risk ratio. So what happens is the market ends up, well, trying to go down. I should have put the stop or the profit target a little higher. But what ends up happening is the market goes on without them and they lose an opportunity. So what I do is I usually go with my high probability profit targets, which might have been a better example. The market goes on without them and they miss out on a chance to make a profit because their risk reward ratio was lopsided. Okay, so now to Arlen's question. He says, if I enter here and I have my stop up here, do I just let the market peel against me? Or how do I know when it's time to get out of the trade? Okay, it's actually a two-part question. First, the initial stop is just that. It's an initial stop. This is your safety net right here. This is, if the world comes unglued, this is where I'm going to get out. This is where I'm going to say uncle. But once again, it's a technical stop. It's not a mathematically based stop. It's not inspired by my weak trading account. All right, so I'm going to put my stop up here to start. This is my worst case scenario. And let's say, I have my profit target. Well, let's say I have my profit target down here. Right, I'm swinging for the fences. I'm going to have my profit target way down here. All right, so the market brings us in, starts going lower. So far, so good. All right, a couple of clues. When you see a candle like this is showing you some buying pressure. The buyers tried to rally the market up. This candle was green for a little while. And then all of a sudden the sellers took control again. Now sometimes when I see a candle like that, I will take my stop and I'll take it to break even. Because this showed an attempt by the buyers to recover the market. The sellers took the market away from them and continued the market lower. So I figure if this bar fails now, I may as well get out at break even. All right, but let's say I chose to hold on a little bit longer. Let's say I missed this. I wasn't paying attention. I missed this. Now all of a sudden I got a green bar. Okay, well, I'm not panicking just yet. Excuse me. I'm not going to panic just yet because I feel very confident about my position. It's a high probability signal, so on and so forth. Okay. During this phase, oops, sorry. Got it. Okay. Okay, so even though the market is moving against me now, I know that somewhere during this pullback phase, the sellers will make one more move lower. How do I know that, you ask? It's not because I scrolled back and I already know what's going to happen. I know this will happen because of two things. First off, the market is in a huge downtrend, right? It took a whole lot of effort to move the market down like this. There is a serious amount of selling going on here. Okay, so we have a very strong downtrend. The buyers took short-term control. Now the sellers are piling it on again, right? The sellers are trying to recapture their trend. So that's point number one. If I look at the context of the chart, this market is in a downtrend. The sellers are not going to walk away from this simply because the buyers made a little bit of a push higher. So that's point number one. Point number two is we broke this little itty bitty swing low. That is significant. That tells me that I'm making lower lows, lower highs. The sellers have maintained control of the market, and they will continue to maintain control of the market until they take out at least that little itty bitty swing high right there. So I know when we break a swing low or swing high, there should be at least two moves in the direction of the breakout. So this was move number one that brought us down here. So now I'm going to look for move number two, watching this swing high. So I still have my safety net in place up here. Okay, now the sellers are starting to press. This is the last chance the sellers have to maintain control of the market. Why do I say that? Well, because they've proven that they can make another lower high. They haven't proven yet that they can make another lower low. So now, if I haven't already moved my stop to break even, now I'm going to take it from here, and I'm going to put it right above that high, right here. And very likely I will go bar for bar lower. So now I'm going to roll to here, or I may leave it 2 bars back, whatever you choose, however you choose to be with it. But let's say I'm going to go bar for bar. Now we're at the low. Oh, now we're getting some reaction here, right? And what happens next? I get tapped for a small profit, or if I had my trade here at break even, maybe hoping to give it a little bit more of a chance, now I got tagged at break even. Okay, so that's what you want to do. You want to give your trade as much of a chance to work out as possible by running a wider stop initially. But then when the market shows you that it's moving in your direction, that, it's, remember here, we started here. So there's our signal, right? There's the signal. So we're going to enter here. Here's our profit target down here. The market is moving lower. Okay, all is good. Oh, it's starting to move higher. Oh, okay, now here come the sellers. Now I'm going to get serious about rolling my stop. So even if I put my stop here and I got stopped out, let's say I initially had a $200 stop here. Here I probably got like a $50 stop. So even if I get tapped for 50 bucks, it's not the end of the world. Okay, keeps going lower, keeps going lower. Okay, I'll roll it to break even plus a little bit for commissions. All right, come on, sellers. Come on, sellers. No, no sellers. So that's how I would manage that trade. And that's how I manage all my trades. And you guys know I do because you see me do it in the room all the time. But the thing that I try not to do is I try not to strangle the trade so that I don't even have that chance, especially the way the markets are the last few days. What I did at the end of the close of the trading room yesterday, we actually buttoned up a little bit earlier because the market was so wild. I saw an opportunity to develop about 5 minutes after I closed the room, and I ran an insanely deep stop. This is something that I didn't want people in the room to see me do because it was so insane. But it was like my entry was here, my stop was way, way, way down here. And I didn't have a profit target. I just let it run. But that was the kind of stop that I needed in order to ride out the activity that the market had been doing that day. And running a great big stop like this might give you the willies, but trust me that it is better to have a safety net way down here than to run a bunch of stops that seem a little bit more comfortable because of the dollar amount, only to get hit time and again, time and again, time and again, to get stopped out and stopped out and stopped out. It is no fun taking all those little hits. It's like death by 1,000 paper cuts. See, now let's pretend we had taken this signal here. And where would it be a technically sound stop? Well, probably below these lows right here. You can see we got a swing low here, we got a swing low here. And we've got our support and resistance line here. So let's say we took that our stop right here. And now we're long. Where are we going to manage our trade? When are we going to move our stop higher? Do you think maybe now is a good time to move our stop higher? I do. We've had, the buyers commit. They brought us in. The sellers came down. The buyers recommitted. I would probably want my stop right below there. If the buyers can't hold the market at this point, well, then they're probably going to make a run at my stop, so I might as well get stopped out here. So while I have $200 initially on the table, I just got tagged for maybe half of that, $100. So now let's see whether they do, in fact, come down here and run my stop. So I took a $100 hit. It happens. It's not the end of the world. It's not going to bankrupt me. That's one thing about the trade manager is it always manages your position so that you never risk more than you can afford to lose. And there you go. They would have just tapped me for the full loss. So by watching how the market is behaving, I was able to minimize my exposure. We'll see if we can do it again. Well, here, let's say we took this trend change signal right here. This is an early trend change signal. Where's a technically sound place to put our stop? Well, we've got, some support right here. If that seems a little bit too cozy given the current market, how about we run it up there? That seems pretty good, doesn't it? Now we're going to pretend that we didn't just hit our profit target. We're going to try to figure out where is the best place now to manage our stop. Well, the market just made a serious swing lower here. I would take my stop from up here, and at the very least, I would put it there. And now, given how low the market has gone, I would definitely be at break even, and I would probably be rolling bar for bar. I'd be using something like the bar high low strategy or parabolics, which are pretty aggressive. Bar high low would have just been stopped out with profit. Parabolics would still have us here at break even. But even though we initially had this great big stop, it didn't, again, it was a safety net, right? You're on a high wire. You want to know there's that safety net below you. And just like a trapeze artist, you hope you don't need to use the safety net, but you're sure grateful it's there. Oh, sorry, there's parabolics. So if we were using parabolics, we would still be in this trade. It's nice to see the market actually simmering down a little bit. These bars are even halfway normal in their pace. All right, let's see if we can find another example. Let's see if we're getting some signals here. I heard a scalp signal. Okay, here's a macro pullback signal. Coming out of a bunch of yellow bars. Oh, now we're into yellow bars, so that signal doesn't count anymore. Okay, here's a green bar sell signal. Okay, so we short. Where do we want to cover? Well, at the very least, oh, the signal just disappeared. At the very least, we would want to cover above here, right? but maybe we would want to cover way above here. That would give us a little bit more staying power, wouldn't it? Sure it would. Okay, these are all yellow bars. We don't trade yellow bars on the hawk. They are too neutral. Here's the eagle, getting a sell signal off of the hard edge, which was a little bit late on. So here too, the ATR flips the bar over, so this now becomes our signal bar. Where is the most technically sound place to put our stop? Well, the most technically sound place is up here. However, that's going to be too far away. Trade Manager's not going to let me trade that. See, Trade Manager prevents you from overexposing yourself. Well, where's the next best place? Right there. Okay, that's still out of reach. Where's the next best place? Well, probably that swing high right there. And there you go. Another high probability target, and now we should see the market actually reverse a little bit and try to head a little higher. Huge opening range this morning. Good question here from Arlen. Arlen says, do you ever see trades that set up, you enter, and then they immediately go against you? Is this a rhetorical question? Arlen says, I assume your DTS tools would help prevent this, but the markets are their own animal at times. Yes, you're absolutely correct. Usually the DTS tools do a good job of filtering out those types of trades, especially if we focus on our high probability setups, like the first micro macro cross that just tripped here in the hawk. This is one of our high probability signals that we would take. Here's a macro pullback. Let's see. I'll take it. Oh, come on, baby. Can I cover it there? So now the macro pullback is into yellow bars, so we'll cancel that order. But yes, you know, like you said, you can't always get everything right. The DTS signals are high probability signals, but they're not 100%. Even here on Wednesday mornings, people will see me take a losing trade. Oh, I was just about to try to get into this eagle position here, and it ran on me too. Stinkers. So the eagle having some very good follow through this morning on the signals. This tool right here, this trade manager, this is going to be your life preserver. This is going to keep you from blowing yourself up, and better than that, it also correctly capitalizes you so that when you do have a winning trade, you maximize your profits. Minimize your losses, maximize your profits. Sounds too good to be true, doesn't it? But it's not. Excuse me. But it's not too good to be true, because that's exactly how the traders on Wall Street trade. We just had a late filter entry signal here. Some of the signals still unfolding a little bit too quickly. Nice thing about the Trailblazer is it's a one-click entry system. Let me show you how this works. Where if we produce a signal here, all right, we'll let it take out the low. So you've seen, okay, I'm going to get ready to sell the market if it goes below this low right here. So we just produced a sell signal. You can see the triangle and the hash mark. I'm going to make it move just a little bit further. and almost. I can set an order on the chart also, but I'm going to just show you how this is a one-click entry. I'm afraid to blink. No, they don't want to get below there. What's up with that? There's another sell signal, double hard edge bounce. Oh, now they're going to try to break the upside. I'm not going to get too aggressive on the buy just yet. Oh, well, you know what? I forget sometimes this is a demo room. I can show you stuff. All right, if we get a buy signal, I'll throw in a buy. There we go. Get above that high. Let's see, 92. All right. Oh, what happened? All right. Let's reload. Yes. You never ever want to reload your Ninja while you are in a trade because it resets everything. Yeah, like Tony says, Wednesdays give Eric an opportunity for a mulligan. All right, there we go. That's better. All right, so we're going to produce a buy signal here. We're going to get a failed sell signal. We're going to get a buy. I'm going to show you how this one-click system works. Okay, so there's our buy. And you can see it's just one click and the market defaults, or the parameters default to what I've preset here. So I currently have one contract at 10 ticks. Next time I'll have another contract with a runner. And we automatically had our stops enabled. So now we broke the high. Let's say I try it again. Okay, so this time, let me make this so I can't make it bigger. Okay, so we just hit our first profit target, hit our break-even trigger. The stops are now rolled to break even. And if it gets a little bit higher here, you'll actually be able to see the trade manager roll the stops. No, it didn't get any higher. But that's the nice thing when the market is moving this fast. If you have the Trailblazer, you can simply preset how many orders you want, what kind of profit targets you want, and then you can just go ahead and hit your buy market or sell market buttons. And initiate a trade versus the trade manager, which isn't really more cumbersome, but it does require you to at least, click for your entry, click for your stop loss, click to submit the order. Normally, it's not an issue. Normally, with the warning dots, the audio alerts, we get plenty of warning time. Oh, yes, oil inventory is coming up. Thanks, Mark. Michelle asking a good question. She said, I got here a little bit late. Given the current conditions, would you trade for real? Today is definitely better than the last couple of days. And I think we're going to see things simmer down a little bit. I didn't touch the market at all the first half hour. It was just too volatile. But since then, we've managed to get off a couple of good trades. So it's moving a little bit more normally. Still seeing, those odd little flurries where the market just explodes for a couple of bars. But for the most part, no, it's much better. So Mark reminded me that oil inventory is coming up in a few minutes. Oops, I think I just cleared a bunch of charts. Okay, so here is oil on the Falcon swing trader. And what I tend to do sometimes with the oil inventory is if there's an obvious range, I'll bracket it. But you know what's funny is how often the DTS tool will actually pick up the signal before the inventory. Right now, it looks like we're going to generate a buy signal here. We're working on a trend change signal. Well, actually, I guess we already had the trend change signal develop right here. So it does look like crude oil is going to be a little bit more bullish today, which I suppose isn't a real surprise, seeing that it got down to $38 a barrel yesterday, or 38 and change. But what I would do is we have the OCO function here. So with the OCO function, I'm going to set a buy order, set a sell order. Now these orders are live the moment they go on your chart, so you want to make sure you don't put them too close, especially in a market like crude. And I'm going to go with a very loose stop to start. Do I still have time to set this? Yes, I do. We're going to close this, and I'm going to quickly reset this. Auto trail, break even. Where are you? Auto trail stop. I'm going to give myself a little bit more room here. Okay, and we're going to do the OCO. We're going to buy up here. We're going to sell down here. Stops enabled. Yes, everything looks good. All right, inventory report probably out in a couple minutes time, in which case we should see this market light up a little bit. We are getting a buy signal, so things looking a little bit better for the bulls. This isn't much of a range. Usually what I like to see is I like to see the market go very sideways, you know. Oops, wrong tool. Where we get a nice little channel developing, and then I'll bracket the high and the low. This is a makeshift channel, but I don't mind it so much because we're bouncing off the primary support and we're generating a buy signal. So we'll see. All right, we'll know right away because, of course, the bars are going to go crazy. The alternate method of trading crude oil around the inventory report, a friend of mine likes to let the report hit the floor, and after about a minute, the dust settles, and then he'll bracket the range and take his trade. So that's a much more conservative / sane way to handle it. But hey, we're going to live on the edge here this morning. Problem with crude reports is that it is not beyond crude to sucker punch you. In other words, it'll try to get down below the lows, hit the sell stop, and then reverse and head higher. This is well within crude's ability to do that. We're only 30 cents off the mark, so that's nothing for crude. All right, so we hit to the upside. I'm going to try to hold my stop down here for the moment. Come on, get up there. I'm going to disable the break-even trigger. All right, that's enough. I'll take the trade to break even. And there's no profit objectives, but I know we're probably going to go 2 zones, so I'll throw a profit target up here. And it might be a little bit early. You know, this is crude, of course. The market could go a long ways higher, but I'll get what I can get. Where are we at right now, by the way? Oh, at $100. Only 100, right? Nope, got tapped at break even. Well, that's okay. We'll see here in a moment now whether that was a good call or not. Oops, sorry. And it does appear as though it was a good call to perhaps get out where I did. My stops would have been engaged somewhere around here. So the trade didn't really cost me anything, and it looks like that's it for the action in crude oil. So give me a second here as I try to reload my other charts. Yeah, not much of an inventory report, was it? Just kind of didn't have the follow through I was anticipating. Yeah, so no fireworks in crude oil today. I thought for sure we were going to see a bigger move. Yeah, like Tony says, not like the good old days when we'd see crude oil move $1. Yeah, I know. Crude's been very subdued. Not at all crude-like. The NASDAQ has been trading like crude, and crude's been trading like the NASDAQ. All right, the NQ churning about some more. Yeah, just getting some wild stuff going on. Macro pullback signal, but you know, it's just too crazy to even try to take advantage of something like this. So here's the macro pullback. Technically, there's your entry, but here too, where's your most fundamental place to put your stop? Well, down there, but I can't afford that. So I either pass on the trade or I find another fundamental place. Well, sometimes the bend here in the macro line is a good place. All right, I could afford that. Let's see how that plays out. Uh-huh. So you see, we managed to hit our profit target, get our rest of our trade to break even, and there we go. So had a little bit of a swing on that, but a good example of why you don't want to strangle your trade, right? If I had put my stop right here, boom, hit my stop loss, and then what happens? It goes on without me, right? So give your trade a chance. Some of you will have heard me reference this before, but a trading friend of mine called me up one day, a fellow who I was mentoring, and he was quite upset. He had a tough session in gold. He says, Eric, I just lost $800 or whatever it was. It was substantial. I said, how could you lose $800? I just made 1,000. in gold. We're both trading the exact same market. He loses 800, I make 1,000. It's because he was strangling his trades. He never gave the trade a chance to find its profit target. He would get stopped out. He was so afraid of taking a loss. And I said to him, that's why you have the trade manager. Here we're generating a sell signal. All right, it's a trend change signal. If I've got my risk limited to 2%, if I set up my trade, why would I put my stop here where I have a chance to get stopped out? Why would I not put my stop up there? I can, for my account, I can afford to lose $240. That's only 2% of my trading capital. So whether this seems like a big amount to you or not, I would take the signal. If you can afford the risk, you take the signal. It's as simple as that. Okay, so now we're down here to hit our break-even target. And with a little bit of luck, we'll hit our profit objective. Come on, get down there. Oh, don't you dare. Don't you dare flinch right there. There we go. So our signal was right here. Had I framed the trade, you can't see the signal, I'm sorry, because it's right on the support and resistance line. You'll have to take my word for it. The signal is right there. Had I framed my trade like this, like a lot of people do, afraid that the market's going to reverse against them or stop them out for too much, I would have been stopped out, and then of course the market goes lower. But look at the beauty of the trade manager. Look at what happens to the risk amount. Okay, you see the risk amount? $270. See the risk amount? $240, approximately the same. Let's see if I can stretch it even more. No, a little bit too much out of reach. Okay, well, the point I'm trying to make is the risk amount does not change. See here, the risk amount, $270. The risk amount never changes. What changes? My contract size. If I place my stop here, I have 2 contracts. If I place my stop here, I have 3 contracts. If I place my stop up here, I have 1 contract. But which trade has the greatest probability of success? Now we're talking probability of success. Which trade has the greatest probability of working out? Well, obviously the one with the bigger stop. Right? If I could run a great big huge stop, it would have an enormous chance of working out. Years ago, this is many years ago, like going back about 15, 16 years ago, there was a trader trading feeder cattle, and he was a rancher. This fellow knew his business. He wasn't just a speculator like you and I. He was a rancher. Feeder cattle went limit down, and he started buying feeder cattle like crazy. He was a $1 million account trader. It didn't matter to him that they went limit down. They went limit down, limit down. When the market finally unlocked, he bought like crazy because he knew the price of feeder cattle. It was an abnormally low price that not only would he recover his losses, but he would make that much more money. But he had the ability to run this enormous stop that it didn't matter if feeder cattle kept moving against him. He knew the fundamentals of the market, something that is very difficult for the retail trader to get a grip on. And he knew that feeder cattle prices will go higher or would go higher, which in fact they did. And he made millions on that move. But you and I, we don't have that type of insight. So what do? We have to study the chart. We have to say, aha, this is where the sellers got busy, right? This is where the sellers got serious. The market made this rally higher, this is where the seller said, okay, you're not going any higher than that. Therefore, if I enter the trade here, and then the buyers take the market and rally it up through here, oops, sorry. Ugh, I hate it when it does that. And the market rallies, oh, well, wherever I was, but you get my point. If the market rallies it back up through the stop, then I know I'm definitely on the wrong side of the trade, and it's time to get out. Once again, that's only my safety net. That's all it's there for, is to keep me from destroying my account. And sometimes you'll make a good decision, sometimes you'll make a bad. Here's another sell signal. Where is the fundamental place where we should place our stop? Should we put it here? Well, we could, but it's a little cozy. Here? Better. What about right up here? Why don't we swing for the fences, see if we can get our stop up there? Yes, we can. Okay, so now we're short. How are we going to manage this trade? Well, obviously we're seeing some reaction to these lows here. Okay, still getting a reaction. Are the sellers, do we anticipate the sellers are going to leave this market alone? Well, probably not, right? They made a substantial push lower here. Buyers rallied it up, sellers pushed it down again. Buyers tried to rally it up, sellers pushed it down again. Okay, we've got one red bar. Can we get two? Yes, okay. We got two red bars. Sellers are more serious. Let's roll our stop. Okay, we get stopped out. We initially had $230. That looks like it might be what? Maybe a $60 stop out. Okay, now let's say we didn't roll our stop. Now you're starting to panic, right? Oh, I got $230 on the table. No, you see how the sellers are pushing the market again? Okay, now we're going to get serious. We're going to roll our stop, bar for bar. And now look, we're even in a better situation. If they reverse here, okay, come on, sellers. We might even ride this swing out. Oh, they're trying hard. This is a very important bar. Whoever wins that bar, we should see the market take in that direction. Okay, so now we've got our stop here. We even have a chance maybe to snap it to break even, but let's say we leave it right there at the just above this candle. Okay, so we just got stopped out for maybe a $30 or $40 loss. See, your initial stop, like I say, it's your fail-safe. It's your parachute, your safety net. If everything goes wrong, then that's where you're going to take your hit. But you are always controlling your risk exposure, so you never have more at risk than you can afford. Now look at this. Had I been not as aggressive with my stop, rather than take a $40, $50, $60 hit, I would have actually hit my profit objective. Today, the swings are very wild. You need a very cool head and a slow hand today. And you know what? There's going to be days that you just don't want to trade because the market is not to your liking, maybe for lack of a better word. Oh, nicely done, Jim. Jim said he shorted the YM at 27 out at 96, up 30 points, using a 50-point stop loss. That's what it's going to take today. Well done. Good call. Mark says, Eric, I noticed on the Falcon, you had 8 ticks set for crude. I guess I'm confused. Do you use the standard setting on crude or the 446 setting? The 446 is our alternate setting. I would have thought it was similar to the E-mini, but I'm probably wrong. You do double the high probability target though, don't you? The 6, 8, 12 setting is the default setting, and it will work for 99% of the markets. Certainly those markets that trade at $10 a tick or less. Markets that trade at $12.50 a tick, like the E-mini, like the grain markets, like the euro, we go with our alternate settings of 446. You can always tell by how the daybreak line goes. Funny thing is, I'll use the 446 setting on the British pound because the pound, it trades a little bit slower. You wouldn't know it from today. But here's the daybreak line. And there's the other daybreak line way over here. I'm getting to it. The pound's been a little bit more active as well. But you don't want the daybreak lines to show up too close. You guys have seen me do this before. You know, if you're looking at your hawk and you got daybreak lines like this, you're obviously not generating enough signals. Oh, can you guys hear me again? Yes, okay. Sorry, there was some sort of little interruption there. If your daybreak lines are coming too close, then you need to go with a smaller brick size. And conversely, if your daybreak lines are too far apart, then you need to go with a larger brick size. But when you adjust your brick size, you also want to take a look at your signals. You want to see how quickly they're printing. You don't want to see them printing too quickly. And you want to make sure your high probability signals have follow through. So here's the first micro macro cross signal. Did it have follow through? Yes. Remember, this is our scalping target. 4-arrow consolidation? Yes. Another 4-arrow consolidation? Yes. So long as it's printing and the signals are following through, then that brick size will be adequate. The crude oil market at 4 ticks, well, you wouldn't know it from the way crude is trading right now. It's too tight. It's too fast. You won't be able to react to the signals fast enough. It'll be the way the NASDAQ is unfolding here. You'll never get the signal off. Unless maybe you're using the Trailblazer where you can just click the buy or sell button. But yes, you are correct in crude oil because it tends to be most times a more volatile market. I will double the profit objectives. Same thing for the Russell. I'll tend to double the profit targets for the Russell. Soybeans, I'll tend to double and sometimes even triple the profit objectives because of the nature of the market. As you watch a market, I'm a big proponent of selecting a group of markets and staying with them so that you get to learn them a little bit. You're going to get to know the approximate ranges of a market. Like crude oil, for instance, typically makes anywhere from 800 to 1,000 ticks in a day. That's just how crude oil is. So if you know that, then you can set your profit targets accordingly. Soybeans is similar. They tend to make about $1,000 move every session. on average, we're talking averages now. Oh, so the rodeo continues here on the NQ. Yeah, Mark says, sometimes I get too wrapped up in the NASDAQ and the E-mini and then go to another market. I get confused. Yeah, it's easy to do. You don't need to follow a whole lot of markets. Like I tend to follow more markets a lot of times because people in the room are asking for it. But quite honestly, you could do quite well just following the NASDAQ. It's rare the NASDAQ does not give you enough opportunity in a session to find a profitable trade or two or three. Or like the market has been going lately, 10. Just had a little bit of a first micro macro cross here to the upside. I debated taking it, but all these yellow bars, the extreme swings, I opted to sit this one out. I suppose we could have covered it like that. Certainly didn't hesitate to get up to the profit target. Well, it won't be the last trade I miss. That is for sure. Michael says, people have made money this week with the turmoil. I've stayed in sim, and it still has given me fits enough to yell at my computer. That's actually a good sign because a lot of people don't take their sim trading seriously, and you should, because I know it's cliche, and you've heard it before, but nothing changes when you start trading real money. If you can take your sim trading seriously, then you can take your real money trading seriously as well. Oh, it's just a crazy kind of day today. All right, I think we're going to shut up the room at the top of the hour. If anybody has any questions, please type away. We did manage to lift a couple of trades, though. You know the funny thing? Well, it's not funny, but look at the range here on the Raptor. All this activity, and where are we? We're still within this morning's range, right? This was the high of the morning. This was the low of the morning. We haven't moved anywhere. We've made moves. We've made substantial moves. That's quite the range. What, from 4150 down to 4100 even? 50 points? That's a huge range in the NASDAQ. But we're still moving sideways. We're still range bound. In fact, we're getting a soft edge bounce here. We'll throw in a buy order just before we close out the room, see if we get anything out of this. Get up there. So you can see the trade manager started rolling my stops, and as I mentioned, these stops, you've got 16 stop strategies. They're all customizable. They're all different. They have their pros and cons, percentages, and you can preview them all too. And you can always disable them and pull your stop. No, it didn't let me do that. I didn't release soon enough. And the Trade Manager has the same feature where you have all these different stop strategies to choose from. And you have the risk management component also. Oh, it might be getting a trend change signal here to the downside. If you are trading this afternoon, wow, I would be more bullish. If I had to choose, we're into the bullish lines here on our support and resistance suite as we generate a trend change signal to the downside. I think if you make me choose, I would prefer to be a buyer today. But you guys, you see the ranges and whatnot. So, trade the charts. That always comes back to that. Trade the charts. All right, DTS owners, I will see you in the trading room tomorrow morning. Everyone else, thank you very much for your attendance today. I hope that you were at least mildly entertained. Hopefully we shed light on a few things for you even. And don't forget, next Wednesday, of course, we'll have another open house. And yeah, hope you can make it. We will see you then. Bye for now.